With the Saudi central bank investing $30.5 million in silver SLV shares and $10 million in Silver Miners SIL, and the US Department of the Interior adding silver to its critical minerals list, is there something going on, especially when physical metal, physical silver, has risen by close to $3 Aussie per ounce in the last 2 days?
These headline announcements, I think, are fascinating. First of all, the Saudi investment in SLV and also in silver mining ETF, that was for the Sovereign Wealth Fund. And it's a very small portion, really, of the total. I would say that that's not really all that important. It's lovely to see the people who are in the know, if you like, buying silver by that means. They would be far better actually buying the physical rather than buying into SLV. But I suppose the thing about SLV is that, you don't have to store your silver. Someone else is doing, the SLV is doing it for you. And also, if you're set up as an investment fund, wealth fund, if you like, sovereign wealth fund, then really you just want to deal in paper. So the point about dealing in paper is you've got to ask yourself how this is actually going to be valued at the end of the day, when the value of that paper in currency terms starts declining. But anyway, that's a slightly different thing. I think far more interesting was that the US government is looking very seriously at calling silver or putting it on a critical list, which means that they must ensure that they've got adequate stocks to hand. I think that's the important one. Now, to my mind, they're coming at this very, very late in the game. They should have realized this a long time ago. Of course, we don't know what has been going on in the background between the various government departments looking at this issue. This must have been on the agenda some time ago. But the problem in the past is that if they were to recommend that silver was to go onto the critical minerals list, then that would drive up the price of silver and might even drive up the price of gold. Now, that would not be, if you like, acceptable in terms of, the US Treasury's policy, monetary policy, however you like to describe it. So they're being forced into this late on in the game. And I think, if we look at the experience of other minerals that have been put on critical lists such as this, what's happened is there's been a scramble for the stuff and prices have risen quite sharply. I think it would be too much to, let us say that the current rise in the price of silver has something directly to do with this. I would say that there are other very good reasons for the price of silver to rise. So one way or the other, it just augments the problem. But if you look at the relationship between silver and the silver paper market, going back to ETFs, going back to COMEX futures and all the rest of it, there's no doubt about it. There is a squeeze on the system, which basically is driving prices higher. We have seen the silver price rise while open interest on the COMEX silver contract has fallen. Now that is basically the shorts scrambling to cover their position. That is the real driver for the value of silver at the moment. But I would say that being forced to put silver on a critical minerals list at this late stage is going to be very unhelpful for the paper silver establishment.